Good day, people. Once again, you are welcome to my channel. And here, what I seek to do is to take people through my model and also simplify forex trading as best as I can. We all know in the trading industry there are multiple concepts, but what most traders find it difficult to do is to how to combine all these concepts together to form a meaningful model. So that is what this channel seeks to do. And if this is what you are looking for, then you are mostly welcome. So enough of the chit chats. Let's get right back to business. So in my previous video where I took everyone through my trading model, I made mention of the fact that though I'm an intraday trader and I trade ICT concepts using internal range liquidity to external range liquidity strategy on my higher time frame, there are sometimes the weekly charts which I normally use becomes unclear. Now, when that happens, it doesn't mean I can't trade within that week just because I'm not really clear on the bias on the weekly chart. So in that video, what I made mention of the fact that the daily charts can also be used when the weekly chart is unclear to find the weekly bias. So today, that is what I am going to dive into. So how do we align the daily chart to the weekly internal range liquidity to external range liquidity or vice versa? Remember, we can use the higher time frame candle to predict how the lower time frames will behave. The same way we can use the lower time frames to also predict how the higher time frame candle will be. So first of all, what do we consider if you want to align the weekly chart to the daily chart? First of all, as always, we will need to identify our daily range on the daily chart, and from there we'll be able to find our premium and discount arrays and then link it to the weekly profile. So today, these are the three main things that we are going to go through. So here we have a diagram depicting the weekly charts and that's of the daily time frame. So as we can see here, we have our daily range. That is the range that recently took sell side liquidity and then buy side liquidity. So when you pull our FIB to withdraw our premium and discount, then we wait for the weekly to come back to an internal range liquidity or order block in a discount zone. Remember, we are dealing with a bullish scenario in this case. So on the daily chart, this is what daily candles will behave. So what I'm trying to say is that though we may have one weekly candle, this is how it will also behave on the daily chart. Remember, every candle is a range. So this bullish weekly candle, this is how it will behave on the lower time frame or the daily chart. So when we arrive at the weekly internal range liquidity or order block, you expect that if price is going to respect this zone on the lower time frame, in the absence of a clear opportunity on the weekly chart, what I seek to do is go down to the daily chart and look out for confirmations to tell me where the weekly is going, where the market makers are going to take price to in that week. So everything that is going on here is what I've kind of presented it in a more understanding way at this level. So What this is going to take us to the weekly profile. And the weekly profile, what it seeks to do is to identify which day forms the high or low of the week on the daily chart. So remember, we don't know what the weekly candle is going to be. We are unsure. Because if you were, like I said in my previous video, all we need to do is to drop down to our 4-hour chart and look out for a change in state delivery, and then set up our market maker buy model to execute our trades within that week. But this is the situation, we are unclear of what the weekly chart is presenting. So then we drop down to the daily time frame and we consider the weekly profile. So here we can see that Monday Monday tapped into the weekly key level, and then when Tuesday candle opened, the low swept, that was the previous day low, that is Monday's low, then closed back within it. So on the daily time frame, I am looking for a reversal signature using the candle range theory and then change in state of delivery. So this is the reversal signature. So remember, every candle is a range. So this daily candle, that is on Monday, when you drop down to the 1 hour, you can see clearly how that day behaved. The range becomes very clear on the 1 hour time frame. So when Tuesday candle opened, it took out Monday's range low and then closed back within it. So when you study the candle range theory, you understand that when we fail to close above or below a range, then that means we are going to reverse to the opposite direction. So here we took out Monday's low here, then we reverse towards what? Monday's high. We took out Monday's high and then closed above the opening of the Monday candle to form our change in state of delivery. So on the daily chart, like I said, I'm looking for this reversal pattern to form. And price close above the previous candle to tell me whether market is switching sides or not. So when we close above, I'm very sure that now there is a change in state of delivery. That is my reversal pattern of the weekly key level. And from here, I am very certain that price will proceed higher. So ideally, this is where I'll be looking for my trades. This on Wednesday, because Wednesday candle opens reacted to the daily change in state of delivery. So when this pattern presents itself, all I need to do is to drop down to the 4 hour time frame and look out which stage of my market maker buy model I'm in order to frame my lower time frame setups. So on the daily chart, I can trade on Wednesday, I can trade on Thursday till the weekly external range liquidity is taken out. Now you should remember, any day can form the high or low of the week. Any day can form the high or low of the week. So I'm not of the view that certain days are not tradable, especially on Mondays. That's tradition. Some people have it. Well, it is their own concept, their own trading model, and then if that is what they seek to do, that is okay with them, because at the end of the day, all we want is what? Profitability. But I don't go by that narrative, because any day can form the low or high of the week, and that will be a classic buy or sell day. Week for me. It all depends on which day is going to reverse or form the reversal pattern on the daily chart. It can be a Thursday, it can be a Wednesday, it can be a whatever day, it can even be Friday. And then the subsequent days are okay to trade. So I don't restrict myself that much when it comes to which day to trade or not. All you need to do is to find out whether you have your confirmation to go higher or lower, to go higher or lower. So we trade on Wednesday for our 2 RR. Thursday we get our 2 RR. The Friday we can choose to trade the Friday candle or not. So what you see here is ICT Stanford is Friday, where the Friday uh, closes about 20 to 30% within the weekly range. So Monday was bearish, Tuesday proceeded to be bullish, Wednesday bullish, Thursday bullish, and then Friday closed bearish. So you can trade on this day too if you so wishes. That's if you're able to align all the conditions of the market. If everything is aligning, if all your confirmations are present, then there is no fear trading on Friday. Well, that will be against the trend. But if the opportunity presents itself, why not? You can also trade that candle. So let's look at a chart example here. So this is the current price action, the most recent. And when you go to the weekly chart, look at what happened here. This is, you see, the reversal pattern also forms here. This one is more or less a three candle formation. And one touch into the weekly key level, candle two manipulated, and after that consolidated, more or less an indecision candle. And then the third candle expanded lower. So our weekly external range liquidity was taken out. So this reversal pattern from the CRT concept happens on all time frames. It's fractal. It happens everywhere. So that is one important thing that I decided to incorporate into my trading model, and it has been helping me very, very much. So it took 2 weeks or two weekly candles in order to take out this external range liquidity. Now let's drop to the daily time frame and then see what's happened. Okay, so on a daily time frame, like I said, we look out for our reversal pattern and our what change in state of delivery. So here, this bearish candle was the one that created liquidity on the weekly time frame. And then from here, what are we looking for? Change in state of delivery. The last bullish candle or candles that were formed before the liquidity read. So when market or price closes above that candle, below that candle, then we are certain of our change in state of delivery. So within the week one, that is Friday, rated buy side liquidity. Look at what Monday did. Mostly in the absence of news events, these things happen a lot. Consolidation. Monday consolidated. Tuesday similar. Wednesday same thing. Thursday was where our expansion began. But I will not trade this candle. I will not trade this candle. Remember, if I am not certain on the weekly time frame, it is the daily time frame that I will use as my confirmation to either go higher or lower. So this is where our change in state of delivery occurred. That is on the Friday of that week. So the subsequent week, that is the week two, this is where I'll be looking for my trade towards the weekly external range liquidity. So let's see what happened. On Monday, when the change in state of delivery was formed, a daily internal range liquidity was also created. So on Monday, Monday's candle tapped into the daily internal range liquidity. And look at what Tuesday also did. Tuesday readed Monday's high into the weekly internal or inside the weekly internal range liquidity, and then Wednesday dropped lower. So I'll be trading this candle, this candle, and then this candle to our external range liquidity. That is, I'll be trading on Wednesday, Thursday, and then Friday. Or I can place a trade on Thursday and leave it to run till Friday where the external range liquidity was taken out. So from this level, you can drop down to the 4 hour market maker model like I indicated. Well, sorry, the 4 hour chart, and then look at what stage of the market maker model are you in, and that is where you are going to frame your lower time frame entries from. That is where you are going to frame your lower time frame entries from. So basically, that is all about using the daily time frame or the daily chart to predict how the weekly candle is going to be. That will be all for today. And like I said earlier on, what I seek to do in this channel to take people through my trading model. So the first video I released last week was more or less an overview of the whole trading model. And in subsequent weeks, what I seek to do is to take each part of that model and dive deeper into it so that everyone can get the understanding and then frame their own models out of this my trading strategy. Yes, you can decide to trade exactly how I'm doing, or depending on your trading style, the type of trader you are. Like I said, I'm more or less an intraday trader. If you want to be more or less like a scalper, then it means you have to drop down your time frame alignment. Instead of using the weekly, you can even use the 4 hours, your higher time frame, the 15, and then 1 minute for your executions. So thank you guys all for being patient and then going through everything that I've taught today. And I know that with patience and perseverance, we will all get to our destination. We will all see that profitability we are looking for. So let's keep our fingers crossed. I will try my best to prepare videos on weekly basis. More, I trade part-time. I'm a part-time trader. I have other work that I do. So the least opportunity I get, I try to put down or put together something to help each and everyone. So thank you guys for being present today. Catch you next week. I'm out.